You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the FLOWMASTer SCHWARTZ from CBOE. The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
That music means we are back once again for your bi-weekly source for all things options related. Yes, it is your first dose, listeners, for the new year for all things options. Of course, I'm talking about the Option Block, what the cool kids call the old OB. Another year in the can, but another year to look forward to as well, which is always fun. My name, of course, Mark Longo from the THE, OptionsInsider.com. as well as from the network upon which so many of you folks are binging these days. A couple of reminders here at the top of the show. If you haven't done so already, if you've been listening for a while, by the way, this week, this month marks 17 years since we kicked off this crazy options podcast thing. Since I sat down and said, I don't know, think anybody wants to hear a podcast about options? And lo and behold, here we are 17 years later. Crazy to think about that and say that out loud. Back pre-iPhone, you had to have an RSS reader to get it. It was a handful of technology shows and us out there on the podcast scene. I remember going to some big players in the option space back in the day, and no one knew what the hell a podcast was. Then I would leave, and the IT guy would come running up to me saying, I love your podcast. And I'd say, oh, you're the guy who we're going for right now. The Venn diagram of options traders who are also IT professionals, because that's almost the level of sophistication you needed to be able to get podcasts back in the day. Fast forward a few years, and man, how things have changed. But we're still here cranking away, doing the content you know and love. So if you like what you hear, anytime in those 17 years, throw a like, a comment, a star. All that does help. And of course, we do have the fun going for you these days in terms of the pro. Speaking of the pro, looks like, yeah, there we go. There goes the live there. So all the folks starting to gather in the live there. Now, if you want to join them, they're a great bunch of folks, and we got new people coming in, even the tail end of last week. Congratulations to Roddy, the winner of our December Pro Trading Crate. Our producers will be in touch with you if they have not done so already out there. So you want to join those fun folks over there, only one place to go. TheOptionsInsider.com/pro is the place to go as we go around the horn and see who's joining us to kick off the new year in high style. First, let's go out to the Southern Volatility Mecca, not that far from where I am right now, here in the Southern studio, a little bit to the west, though. We're going to scenic Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show for the first, and the network indeed, for the first time in the new year. How was your new year, sir?
Well, it was great. Was in the Windy City for the new year, and excited to be back home and ready to trade up this market and chat up everything that we're seeing in the world of options.
Yes, a lot to see in the world of options. And also joining us from the quiet, the tranquil hinterlands of Chicago, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, same question for you, sir. How was your New Year's there in the paradise on earth known as St. Charles?
I mean, it's a great New Year, getting to be with friends and family. Can't ask for much more than that.
You cannot ask for more, indeed. And you asked and we heard you. So because you folks tend to like them for some mystifying reason, we are joined once again to kick off the new year by our buddy, the FLOWMASTer, a.k.a. Mr. Henry Schwartz from CBOE. Are you beaming in from CBOE East today, Mr. FLOWMASTer? And how was your New Year, sir?
I am indeed in downtown Manhattan at the CBOE offices. My holiday period was really nice, although it was a very rainy one for in upstate New York. I think it rained for 5 days following Christmas. So it wasn't great for skiing, but it's the year's off to a brisk start, and I'm excited to be here.
Brisk, that's a good word for it. So let's get to it, listeners. Let's break down this brisk market with our first trading block of the new year.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading. So if you're one of the many new people joining us all the time, welcome. This is where we talk the markets that are lighting up our screen right now. And as the FLOWMASTer alluded to, things are a wee bit brisk to kick off the new year. You could be forgiven if towards the end of last year you kind of got into a little bit of a rut, especially post-Halloween, post-Fed. You just saw the market do nothing but just explode upward, hundreds of handles, green, pretty much every day on the screen. So you'd be forgiven for maybe rolling into the new year expecting something similar, expecting an endless slew of green on ye old screen. And what we got was maybe a little bit of cold water to the face as multiple days of red. Now you're starting to see the headlines, worst 5-day period since whatever date, October, November, all that fun. Of course, neglecting the fact that we're still up 600 plus handles from where we were when all this madness began post-Fed. But a lot of fun to be had out there in the markets. A little bit of red on the screen also translates into some vol. As we're kicking off the day here, listeners, markets are kind of struggling to figure out what they want to be today. We had some red on the screen earlier in the session. Then, as we were wont to do a lot last year, we kind of erased it, and we got a whole bunch of green on the screen, and now we're back threatening the 4,700 level. That seems to be the level that we repeatedly try to bounce off of, and we have a couple of times today. It looks like they got the S&P up to around 47 quarter or so. So they did try to put that rally mode in. Then it seems like it has sputtered out right now. S&P up about 0.1%. As we're kicking off the show, NASDAQ down a little over 0.1%. Dow up about 0.33%. So we're kind of treading water right around the 4,700 level. Where will we be even by the end of the show? Who knows? It's anyone's guess out there as we kick off the new year in high style. That means our vol friends are down a wee bit from the last time we got together. Remember, it's been a couple of weeks. Our last show was actually December 21st a lot of year-end stuff going on. I was moving on down here to the Southern studio, so no show on last Thursday, but we're back again today in high style here. And VIX reflecting that, a little bit shy of the 14 handle when we kicked off the show, 1390, down about half a point. VVIX at an 88, down about 6 points, so still frothy, but coming off those triple-digit levels it was at not too long ago. VXX, same deal, 1580 when we commenced operations, down almost 2 points, about 1.7 points there. UVXY, 8 3/4, so we're back talking reverse splits already for UVXY, down about 1 1/3 from our last show, again, a few weeks ago. SVIX, 3680, they can't keep this thing down, up almost 3.5 points, about 340 when we kicked off the show. And UVIX 1430, down over 3, almost 3.5, about 3.4 points there as well for all things UVIX. So a lot to unpack. Let's go back around the horn, the opposite of the way we started. Let's go back out to CBOE East. Mr. Flowmaster, a lot to unpack here on this first episode of the new year. What is catching your eye out there today, sir?
Well, I mean, you did hit on it. There was a notable shift in sentiment around the end of the year. We went from, what December had been a pretty frothy, bullish year, month. We'd seen a lot of upside moves. We'd seen a lot of kind of super speculative stuff. The crypto frenzy was heating up, especially because there's this impending deadline where we may see a spot crypto ETF. Maybe it's I believe next week is a deadline, although the market is still not exactly sure about that. And so we've had the first couple of days were down, notably down compared to how December was, and you almost had a whole reset, right? Last year was really a very, very, very strong year for equities, especially Nasdaq, right up more than 50%. Everything resets on January 1st. I've worked at banks. It doesn't matter how great 2023 was. On the first day of 2024, you start at zero. It's not really like that for kind of the retail community with their portfolios, but there is a big focus on let's just look at how's the year going. So far, the year's not going very well for equities, and that you see it in volatility, you see it in in the levels. But in a way, I think last year was. I think it's nice to turn a page and kind of start fresh in how you want to approach this market and how you want to allocate your money.
You mentioned the approval. How crazy are your compatriots over there at CBOE Digital right now? Are things kind of hectic? Not only are they launching the product, but they're launching it into the teeth of this potential approval we could get any day.
Well, there definitely is a lot of excitement in crypto we haven't seen for a while, that crypto winter. But then I'll tell you, yesterday when some headlines came out that grayscale conversion might not actually get approved, there's a pretty quick sell-off across the entire crypto space. Some of these coins dropped 15-20% quick. I think for Bitcoin it was about $4,000. So almost 10%. Literally, like if you look at all the charts, it was like, whoa, that's almost looks like an S&P chart when something bad happens out there. But the thing about that really resonates to me in crypto is the creativity you see. There's just a lot of people doing interesting things, and CBOE Digital is also a place. It's focused on institutional activity, but we're excited to kind of see that space evolving, basically.
Yeah, that was quite the frenetic downside action. You thought it was bad in the S&P. Yeah, look at not just Bitcoin, but ETH, Solana. My goodness, they came for Solana. So if you're looking for something with a little bit of extra vol, a little bit of spice, if these equity markets aren't doing for you to kick off the new year, then you should be playing out in crypto right now, listeners. Man, there is vol for days across the board. You don't have to look very far to find it. Speaking of crypto, when I think crypto, I think no one else than this person, AKA the owner, the domain registrar of BitcoinReallySucks.com. Mr. Uncle Mike, A, have you renewed that domain? Got to be a popular one. You must be getting offers all the time. And B, how excited were you to see that crazy downside in crypto? And then C, what else is catching your eye in these crazy markets?
Well, I mean, in terms of the domain itself, I mean, it is on the market. I believe I'm asking $3,000 for it. So if anyone wants to buy it, it is for sale. If anyone wants to buy my domain, it could be something worth a ton of money for you. But with that, in terms of, am I happy to see Bitcoin going up and down? I mean, I really don't even look at it because it's really, how can I put this? Bitcoin really sucks. That's kind of my opinion on it. So if you want to trade it short term, God bless you. I have no problem with that. But the people that say that Bitcoin is the future and things like that, well, I respectfully disagree with them. So no, I really don't have much thought on that. Now, in terms of other things that are happening in the market, I guess someone figured out that selling is allowed to happen again. We had that major upturn or uptick towards the end of 2023, but we haven't really had that so far this year. And so it's interesting to see. I mean, Apple's pulled back. I mean, Apple is. I mean, people have made fun of us for not rolling up our 180 calls like we have on our covered calls with Apple. But well, I guess they haven't made fun of us. But if I was a heckler, I would have made fun of me. But we didn't. And now we're coming back down. So it's kind of getting exciting right now for us on our covered calls with Apple nonetheless. And a few other ones to where we have some covered calls that have gone on the money, and we've been pretty patient with them. And been taking our lumps, getting some lesser premium for the last couple months, staying in the money, but now it's patience is seeming to be rewarded right now in the covered call world for us nonetheless. But that's the world of covered calls. Sometimes it's good, sometimes it's bad, like anything. Bonds have definitely not been the place to be so far this year. And I think what's interesting about this is that right now, it doesn't look like we're going to have any rate increases for 2024. Now, does that mean that we won't? Of course not. But so far, bonds have not been attractive for people so far in 2024. And that's kind of interesting to see in that all of a sudden, everyone was talking about how bonds were this great investment a couple months ago, which I still like bonds and I still have exposure to them. Don't get me wrong. But at least so far in 2024, they have not been the most popular thing. And so right now with the 4,700 level staring us in the face right now with the S&P, are we really getting killed right now in the markets this year? No, not at all. But we have not come off to a major start in the marketplace. Now, a couple things to keep in mind for 2024. It is going to be an election year, so it's going to be interesting to see how the debates, the primaries, and things like that play into all of this. It's also going to be interesting to see how this whole Epstein thing falls into marketplace with what's going on with that. And just once again, full disclosure, I hate all politicians. I'm an equal opportunity hater, so I'm not trying to be political by any means. But I do think we need to keep an eye on that to see if that does play into anything in terms of market policy, because it seems like a lot of people we're going to the Forbidden Island in a lot of ways. So it'll be interesting to see. And that's what I'm seeing so far on the first show of January.
I did not have Uncle Mike being the first one to bring up Epstein on my network for this year, so I lost that on my easy for me to say. You flummoxed me, sir, on my bingo card. But I was thinking of you earlier this morning, Uncle Mike, because I was discussing Apple with someone, and I was making my joke that when the markets, Apple is red, the markets cannot be green. And they pointed out that Apple has no new products. There's no new innovation there. And I thought to myself, where have I heard that before? Oh, yes, Uncle Mike. So pretty much for the last, 5 years now, you've been beating that drum. It seems like at least some of the analysts may be finally catching up to you, Mr. Uncle Mike.
Well, they've had such a run up because, let's be honest, Apple changed the world 10, 15 years ago. They literally changed the world like arguably very few companies have. And so I think they're still riding the coattails of 10, 15 years ago, quite honestly. And they're a good, solid company, but the innovation index is not there like it once was.
I almost quoted your innovation index, but I contained myself today, sir. But I did think of you. So there you go, Uncle Mike, making it in, even off the show. And last but not least, I did not think of the greasiest of meatballs, but he's back with us nonetheless. Mr. Meatball, sir, a bit of a rollicking start to the new year, a little bit of all dribbling onto our screens, which makes things interesting. What's catching your eye out there, sir?
Yeah, we were kind of overbought into the end of the year. A little bit of selling. We kind of kissed the 21-day moving average. We're still seeing some rotation out of some of the mega caps, and some strength in things like energy and some of the other names. Although today, some movement in the financials today. The drug stocks are having a good day. The industrials, but it's been and the biotechs. It's been a rotation-y day. On any given day, it seems to be a flavor that they're buying while they are selling, appear to be selling some of these mega caps. And even within the mega caps, they're rotating. They're out of Apple into Nvidia, out of Nvidia into Amazon, out of Amazon into Meta and Microsoft. It's like a daily whack-a-mole for what's going to be up and what's going to be down.
It is a daily whack-a-mole. That's what we can call this show, the daily whack-a-mole. Every day. What are we whacking today out here in the markets? Speaking of things that are maybe a little bit wacky as well, before we keep rolling, we did our kind of year in review episode last time, so I won't belabor all of that stuff. But we do have some more data in our hot little hands that I do want to go over, especially with the FLOWMASTER joining us out here today, and that we finally have the final numbers for the mad year that was 2023. One of the narratives that's been going on out there throughout the year has been, can we possibly keep this gravy train of volume going throughout the year? Obviously, we had a boom year in 2020 and again in 2021, but those were, shall we say, special years. Everyone was home, everyone was trading, wasn't much else to do. Kind of a bit of an aberration. Could we keep that rolling into 2022? The answer was yes. And now everyone was asking, could we do it in 2023? And the answer, once again, a resounding yes. We were very excited to have, I think, around 10 and a third billion contracts total on the tape last year. And blew that away again this year, up a little over 7%, 11.1 billion contracts with a B coming in on the tape over there at OCC last year. So yes, the records keep on coming. Now, the intriguing thing, once you start digging into some of these numbers too, is that it may not be all the things you suspect. And we were just talking about Apple. Every show we talk about Apple and Tesla and Amazon and all these names that are dominating the tape, Nvidia out there. But were they really the big drivers of volume this year? The answer, kind of no. If we look out there overall on the equity volume front, equity options were pretty much unched, up about 0.5% in terms of 2023 versus 2022. So that's not where the growth came from. The growth came in ETF options, up 11.6%, and then just a banger year, up 33.1% for index options. I wonder what could have been driving the other two out there. So it kind of does raise an interesting question. Without the zero DTE addition to the markets out there, would we have a flat year? That's an intriguing question. Mr. FLOWMASTER, I put it to you, sir. First off, I mean, you track these day to day, so I'm guessing you weren't surprised at the resulting OCC numbers for the year. But if you have any thoughts on the overall volume trends, have at it. And then B, what are your thoughts on maybe if we pull the 0 day out of the pie, are we looking at maybe a flat year?
I mean, you're right. I've been watching the numbers. We were tracking for like 11.2 until we got into December, and then things slowed down. But it is amazing to see over 11 billion contracts trade, and I'm impressed with how mature your podcasts are going back. Did you say 14 years?
17, the big 17, sir. We can go to college soon.
2000
started in 2007. Yes.
Okay. So, back then we were looking at, volume around 3 billion contracts. So here we are at 11. That's pretty impressive. It's funny. It's not as easy to just subtract out 0 day and compare, because we've had weekly Fridays for years, and we've had Monday, Wednesdays for years. So the only real change that's recent is the fill-in of Tuesday, Thursdays. I'll do my best to kind of specifically just look at, say, flow, volume excluding everything expires within a week, and see how things look. My guess is that there is some growth there. It's not nearly as strong as the 0 day. The 0 day definitely carried kind of our market forward. And, it'll be interesting. This year's going to be a little different. I don't really think we're going to see further growth in the 0 day. It's kind of plateaued when you look at it across, all the products that have it, SPX and XSP, SPY, NASDAQ and Qs. We're listing them in Russell options, but Russell's not the most active product in the first place. So, that might pick up 6,000 or 7,000 contracts a day, but it's not going to be, it's not going to be the extra 10 million contracts a day that we've basically gotten out of the zero DTE kind of edition. But there's growth, and it is really interesting when you dig through the pieces, to see that all the growth in the ETF and index world and single stocks just barely, seeing anything new is also kind of interesting, right? So the other thing is it was the second year in a row I think Tesla beat Apple as the most active. So Apple has been really dethroned. I guess that's going to make Mike happy. But there's still a few days that it'll spike up and be the leader, but Tesla seems to be the focus. Maybe everybody's reading the Elon Musk biography like I am, and then going out and trading some options.
Yeah, I'm hard pressed to think of the last day we had Tesla get dethroned in our top 10. It's pretty much a stalwart out there. And spoiler alert, it's going to be there again in a little bit, listeners, when we get there. Before we roll off the volume numbers for the year, Uncle Mike or Mr. Meatball, anything you want to add on yet another banner record year for the options market?
No, I think it just shows that options are being more and more adopted widely as people realize the value they have. And the leverage they provide, especially as the names that people want to own become more and more expensive. The only way to do it without shelling out hundreds of thousands of dollars is to use options, and that has been yet another reason for the pop in adoption here. I'm excited to see what 2024 brings for the options space. I think it's going to be a good one. But 2023 was definitely one for the books.
Indeed, this time a year ago, no one had the crazy AI boom carrying the markets to stratospheric new levels. Also, no one had the contagion fears on their docket. So who knows what the unknown unknowns are that are lurking out there in the markets right now. And speaking of those markets, let's see how they're shaping up right now. And after a few days of red, we're not seeing a ton of paper. Let me back that off, because the broad indices are doing all right. Just the vol products seem like they're kind of languishing a little bit. VIX right now, a little bit shy of 250,000 contracts, 235,000. That's not a ton. Also, the ADV is kind of light, 620,000. But then again, we are coming off the seasonally lightest period out there in the markets, which is, of course, mid to late December. So kind of expect that ADV to come in. SPY, though, looking a little bit more robust. 4.33 million. That's about where we expect SPY to be this time of day. The ADV 7.44. Will it hit it today? I don't know. If we keep this whipsawing action up, we might be able to get there. The S 1.7 million. I won't beat that dead horse. That used to be a ton of paper. Now it's kind of the expected level as well. The ADV almost 3.2 million out there. So again, reflecting just how much paper has surged into those 0-day contracts. Small caps, 567,000 contracts up there in IWM right now. The ADV 1.5 million. So it's roughly a third of the way to its ADV. Probably not going to hit that today. And then the Qs hanging out a little bit north of 2 million, where they usually are this time of day as well. About 2.1 million right now. The ADV right around 3.4 million. Let's go out to the single names and see if we can find some action out there. Is it a robust day for single names? The answer is no, not really. No messing around with it today, listeners. Only cost you 181,000 contracts to break into the top 10. That's kind of what we expect for late December, or again, the first week of January, right? Again, not exactly a seasonally banger period for the options market. 181,000, that's about what we expected. That gets us all the way to our buddy Microsoft. Ever since the Magnificent Seven started rampaging, we've seen Microsoft a regular once again in our top 10. Kind of unched right now, off about 12 cents, trading 370 and about a half, even though it's had a little over $3 range on the day. So softy, kind of reflecting the whipsaw action that's been going on out there in the markets. Number 8, we have our old friend, the Walgreens Boots Alliance, although maybe not for much longer. I do love that name. It sounds like it's straight out of Star Trek. 188,000 contracts for the number 9 spot. They're selling off $1.70. Some crazy news coming out of them out there that they are slashing their dividend. And the market not liking that. Earlier on, they were crushing it a little bit, coming back a little bit now, but still off about 6.6% on the day, trading a little bit shy of $24. Then number 8, off to Citi. We are starting to look at the financials again for the beginning of perhaps a new earnings season, a new earnings cycle. So that means some folks looking at Citi. Folks have been loving the financials as well post-Fed. So Citi right around 54 and a quarter right now, up about 2/3 of a buck or a little over 1%. Citi good for 218,000. Again, it's kind of a sleepy day when Citi's making it onto our top 10, but we have to go where the paper takes us, listeners. Like to number 7. This is a name. I don't think we've talked about this one in quite some time. This is QuantumScape. Ticker symbol QS, trading $9.38, up about nearly $3, or a whopping 45%. So that's going to do it. If you're up 45%, you have a good chance of making our top 10 most actives that day. If you're wondering, this is a company that develops solid state lithium batteries for electric cars. So squarely in the wheelhouse of what is hot right now. And again, popping hard today, 232,000 contracts, up 45%. I don't know if we're going to have anything else to rival that in terms of just banger days, listeners, but let's see what we can find. Number 6, AMD, the chip zone coming pretty much exactly where we expected. Number 6, it's AMD, 137 and about a third, up nearly $2 or about 1.5% today. Good for 308,000 contracts. I was just talking about the crypto madness that's going on out there. A lot of that reflected in our old friend Marathon Digital Holdings, ticker symbol MARA, number 5, listeners. 319,000 contracts on the tape out there. MARA, man, they have been all over the place over the better part of the last week. A week ago, they were almost $30. Then they sold off to about 20, right to kick off the new year, 20 and a half, and right back up to $25 right now. So again, if you're looking for a little bit of vol, the crypto space has you covered right now. Marathon also obviously the highest ADV crypto-related name that we talk about a lot. So I know a lot of you folks love yourself some Mara. Clearly today that is showing 319,000 contracts. And the number 5 spot. Number 4, back to some more traditional players, shall we say. The Amazonians, 145.60, off nearly $3, or nearly 2% today, and good for 534,000 contracts. I think you can probably guess the remaining 3 yourselves, listeners, but you know what? We got new people all the time, so I'll break it down for you. NVIDIA, 483 even, up 7 1/3, or about 1.5%. So another day, another 7 handles for NVIDIA, 633,000 contracts on the tape. And the number 3 spot. Number 2, again, we just talked about it. I gave you a spoiler earlier. It's the fruit company. They were 124, 125 not that long ago. And then, of course, going the other way, threatening 200, threatening all-time highs. Now retreating off that. Seems like all of a sudden some analysts starting to sink their teeth into Apple, continuing to pull it down. Off about another 1.5 points today, trading 182.80. Good for 896,000 contracts. And then number 1, you know it, you love it. Maybe you hate it. Either way, a lot of you like to trade it. It is Tesla, 241 2/3, up about 3 1/4, or about 1 1/3%. And as the FLOWMASTER has alluded, it's pretty much the top dog in the single names these days. Not much can really unseat it. Once in a while, a crazy name has a crazy move, and it knocks Tesla to number 2, but usually it is the top dog out there. I joked about earnings earlier. Not a ton on the docket quite yet, listeners, unless you're really excited about Walgreens Boots Alliance. But other than that, not a lot going on. If you want to check out the final earnings reports we have for the year last year, you can find those over there, theoptionsinsider.com. Click on the Options News and Articles tab. If you did so, you would see that the season ended up right around 119%. So banger cycle. We said throughout the cycle, everyone was pricing in more juice, and more often than not, they were hitting, if not exceeding, those levels. And that is reflected in the overall average for the season, 119. Our long-term average right now, going back many years, is 100%. So exactly par. So 119, that's a banger no matter how you cut it. Let's see if we have some more bangers in store for you, listeners, because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
right, everyone. Welcome to the Odd Block, the portion of the show where we get weird, we get wild. Occasionally, we unleash the eye of the FLOWMASTER. And he actually has fixed his gaze first on a name we've talked about once or twice recently, making a return appearance. This is Cenovus Energy Inc., ticker symbol CAVE, CBE. You know them, Canadian Integrated Oil and Gas Company. Trading $16.50 right now, off about half a buck, or nearly 3% on the day. On the year, kind of been a topsy-turvy year. A year ago was $18 and change, so they're off about $1.50 or nearly 9% on the year. The low came, looks like about a little bit shy of $15, $14.97. That came in May, and the high was right around 21 1/3. That came about mid-October, it looks like. So they've had some highs, they've had some lows. They're hanging out towards the lower middle end of that range right now, still off about $1.50 out there. But Mr. FLOWMASTER, sir, what caught your eye in our old friend Cave today, sir?
Yeah, so this is a 10,000 lot sweep, which I saw, and a sweep order is, we've talked about them before. That's when somebody uses a smart router to kind of snap up all the liquidity they possibly can in a contract. And in this case, it involved 50 individual orders, basically lifting the offers on most of the exchanges. So what the buyer did is paid 65 to 70 cents for 10,000 of the Feb 17 strike calls. And that's opening because we can see that because it exceeds the open interest. And it's a big trade for the name. The average daily call volume in this thing is only 7,000 contracts. Strikes about 2.5% out of the money, so it's not very far out. The time decay is going to be a killer if this thing doesn't start to move in a week or two. And I don't think, just see if they capture earnings there. Earnings are not yet confirmed, but might be around February 15th. So so it's funny. Another one that I was looking at also is right around earnings. So it looks to me like somebody's looking for that stock to kind of recover. It is kind of towards the lower end of its range, but just a nice solid directional sweep opening call buyer.
Yeah, I was just looking while you were talking. I know we've talked about this name recently. It looks like most recently was back on our Options Oddities show on late September. We talked about someone buying some puts. These were puts they bought back in June. We paid them off in late September. These were the July 17 puts for 60 cents. The stock was right around $17, so not that far from where it is right now. And these puts went the way of the dodo. They ended up dropping about $1.45 on this trade. Sounds like they're going the other way with some upside call love. Mr. Meatball, sir, did you notice these CBE calls, and what are your thoughts, sir?
This guy comes in and sweeps buys. Don't be surprised if you see a sale of these tomorrow. I don't know what this guy's deal is, but over the last couple months, we've seen like 3 or 4 times a trader come in, scoop 10,000 calls in the CBE, and then when it doesn't move the next day, which it has not, they sell them. I don't know if Henry, if you've noticed that pattern, but this is not the most unusual trade, and it has been unsuccessful thus far.
So you're saying they're not hodling Cave here. They're in for a day.
This is not one I'm piggybacking on at all. Not one I'm piggybacking.
Interesting. I can respect a man who gets the heck out of a dodge if things don't go their way. How many people have we seen ride their trades into oblivion? Maybe you want to hold it longer than a day, but hey, who are we to judge? Oh, wait, that is exactly our job here on the show. We judge these things. Let's keep rolling and see if we can judge some more. Let's go out to another name the FLOWMASTER was keeping an eye on. This is DraftKings. You know them. You love them. Ticker symbol DKNG. I am down here in the southern studio in the land of Florida where DraftKings not allowed, so I have no access to any fun wagering to kick off the new year. I've been making up my fun in other ways, listeners. 33 even is where DraftKings is trading right now, up about 80 cents or about 2.5% on the day right now. On the year, it's been quite the year for DraftKings. They were trading 1171 to start off the year a year ago. So they're up 21 1/4 or 181%. So DraftKings, man, on the rampage. I'm trying to remember. It's been a while since we've checked in with DraftKings. They were hot with us towards the tail end of the meme madness into 2022, and then kind of haven't been on our radar as much, even though they have been moving. Again, the low was pretty much where they were to kick off the year a year ago, 11.14. The high, they got up to nearly $40, 39 and a third. That was in mid-November. So they have retreated off their highs, but it's still 182%. You can't be mad at that if you're long some DraftKings. Mr. Flowmaster, sir, what caught your eye out there in good old DKNG this week?
So this is an interesting one because yesterday I wrote up a put spread collar that I saw print in pretty decent size. So yesterday, stock was down, I think. I mean, the market was down in general yesterday. And what we saw was a seller of the Jan 36 calls. This is when the stock was around 32.5. Seller of about 4,500 Jan 36 strike calls for 33 cents. And then they bought the Jan 31, 33 put spread for 77 cents. So it's a net 44-cent debit, around $200,000. We could tell all three legs were opening, and we had that exchange data, the open close data, which is very useful for kind of identifying customer versus firm versus market maker on especially on some of these package trades like this. And it was an open customer. So, that stock, as you said, it's been a hot one. It was up, I think it tripled last year from like 11 to 33-ish. And so I just took that as somebody kind of saying, okay, last year was awesome. I just want to collar myself up. And, the put spread collar is a cool way to do it. We see that in a lot of cases, even in the SPX, there's an enormous put spread collar that trades every quarter. The concept being basically that, if you own an underlying or you like a stock, usually you're happy to overwrite it at some level, maybe up 10, 15, 20%. And then you want to buy some puts. But, in a lot of cases, what you really want is a put spread, because if stock goes down 5, 6, 7%, you want some cover, some cushion. If stock goes down 30 or 40% and you like the stock, then you actually want to get long it. And that's why people kind of do the collar, the put spread instead of the put. So that was the sentiment, but today it's actually kind of flipped the other direction. Stock's up about 80 cents, and today's trade is a big roll. So what they did is sold 10,000 of the Feb 2nd 35 calls, and they bought 10,000 of March 34 calls. So it's a diagonal. Basically, it looks to me like they're selling the Feb 35s to close. They did get about $1 for it, but I think they paid almost $3 for them in November. And they're buying these March, but they are laying out another $2 in the trade. So basically, they're taking a loss on this large position that's been around for a couple months and kind of re-upping it and putting more money into the trades. This seems to be somebody who actually really does like the stock, which is interesting after seeing yesterday somebody who seems to be kind of taking some chips off the table. But it's it's obviously a hot name, and sports betting it's not going to go away. So it's an interesting one to see, and I just like to see the kind of the diverse views, right? Somebody is nervous, takes some money off, and somebody else comes along and says, no, I like it.
Yeah, we haven't seen too many names that are this straight up all year. We saw a lot of names rally early in the year last year, then sell off post-February. Maybe some of them rallied into Halloween, early November, then they sold off. There weren't many names that had just a banger blowout year outside of the Magnificent Seven. Clearly, you can put DraftKings in that list. Mr. Meatball, sir, what are your thoughts on some collars and some other action going up out here in DraftKings? Hot name again.
Yeah, I mean, it's always a hot name. It is like, you look at the returns on DraftKings over the last 2 years relative to the entire rest of the gambling business, and it is pretty phenomenal. So, with how strong this thing has been over the last 2 years, does not surprise me to see some active hedging.
Speaking of some hedging, or at least some put activity in DraftKings, that is the last time we talked about this name, too. We went back to the September 21st show where the Flowmaster was talking about a size put seller in DraftKings. At the time, he profiled 11,000 of the Nove 22 half puts going up for 48 cents. The stock, as we just talked about, rallied far away from 22 halves. The stock, when we time you profile this, was 28.73, so they still weren't that close, but they managed to get nearly half a buck for these, so not a bad do, as they say. And the stock went out nearly 39 bucks, 38 and a third. There were actually double that. There were 22,000 puts open on that strike at expiration, so yeah, they rode these into oblivion. So on that 11,000 lot, they pocketed a little over about 5.3 million. Obviously, double that for the double OI out there. So, Mr. Flowmaster, do you recall profiling that trade? And what are your thoughts on somebody skating on some decent premium here in DraftKings?
Well, I mean, as much as people get nervous about selling puts, it is a limited risk trade, right? It's not going to only go to zero. I do remember talking about that. I think we were kind of talking about a, put bomber kind of trade or almost like a Warren Buffett style. Like, listen, I like this company enough that I would take the whole thing at this price, at this discount to current. It's kind of the wonderful thing about options is you have all these different use cases. If somebody said, listen, I like this stock, and rather than buying it here, I just want to sell a block of puts, and basically I'll be happy if I keep my premium. I'll be happy. I don't know. It's hard to say I'll be happy if the stock gets hammered and then I get put in the stock, but it's very easy to talk yourself into that trade when you're looking at a company and you are comfortable with the valuation. So, it's another example of kind of different views at work. And then, the liquidity community gets in there in the middle and basically kind of offsets those risks, as all of us have done in the past.
All right, let's get out of here on one more for you listeners, because we like you. We're giving you all sorts of fun out there. Let's go out to everyone's favorite name. This is Zim Integrated Shipping Services Limited. Say that 5 times fast. Ticker symbol ZIM, ZIM, trading 13.5 bucks right now, up about $1.25 or a little over 10% on the year. A year ago, they were 17.19, so they're off about 370, a little over 21% on the year. The high came, looks like, right around the contagion period, mid-March, 25.12. Then they kind of fell out of bed. They actually sold them off down to about 6 1/3. So again, this is another glass half full, glass half empty name, depending on how you look at it. From the highs around March, this thing got annihilated. But again, from the lows, it's pretty much doubled from about 639 back up to 13.5, more than doubled. So it's been a nice little run over the past couple of months, even if the net on the year, they are still coming for it. But listeners, what did our Eye of Sauron find out there today? Seems like somebody thinks there's more room to run on the upside out here in Zim, listeners, because we first noticed someone coming in and going right for the jugular, going right for tomorrow, buying 3,117 of the Jan 13 halves, expiring tomorrow for about 12 cents. They came back in. They liked them so much they did 1,500 more for 20, almost 21 cents. A total of about 10,000 have gone up on the day so far. There was some other call action going up there as well, 14s, some stuff expiring on the monthlies as well. It's kind of just a call palooza today out there in Zim. Mr. Flowmaster, I'm curious if you noticed this and just the frenzy of upside activity in your new favorite name, Zim, sir.
Well, yeah, as I said, December we saw all sorts of funky stuff. That QuantumScape one is similar, right? It's like, looks kind of squeezy, although it's not that hard to borrow. The Zim one, it looks to me, based on the exchange data, I can see that it definitely is dominated by customers buying, but we're also seeing some customers on the sell side. So, I don't know if this is a challenging borrow or not, but as soon as we had a couple of days of a decent little sell off, I think surprised some people. And we've stabilized today, right? So maybe we're kind of getting some of these bullish pockets back in the game, as people kind of lay out their year.
All right, listeners, it is Thursday, so let's keep on rolling. Get some of you on the show, a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you folks take the reins, your questions, your comments. Good to see all of our folks flocking in here really to kick off the new year there on the Pro live chat. It's just a love fest in there. Everyone's saying happy to be back, happy to listen into the show. Glad to have the OB crew back in our lives to kick off the new year. Said Nichols, Option God, happy new year to everybody out there. Aged Aquarius said made the live for the first time of hopefully many in 2024. Well, we hope that too. Options Queen, one of our stalwarts in there. Good to see everyone again. Looking forward to a great trading year. We all are as well here. Happy New Year's across the board. Folks talking about slinging Solana, talking about the crazy ride that has been Solana. Other folks, Age talking about Walgreens slashing their dividend out there. And then the folks chomping on, Queen and others chomping on what we're just talking about, DraftKings and craziness it is. And a good old OG saying he likes hearing the show live and raw without the music and the edits. He says it sounds cool. Yeah, we're coming at you from the Southern studio, so you're not getting all the bells and whistles in the live stream that you do when I'm coming out of the Chicago studio. So you get to hear it more raw and uncut and untamed Uncle Mike, as we like to say out there. Speaking of Uncle Mike, it is time to get his opinion, indeed everyone's opinions, on our questions of the week. Let's kick it off now. It's New Year, listeners. New week, new year. That means it's time. It's time once again for our annual sentiment poll. You had to buy a 10% out of the money call expiring at the end of the year, December 31st, on one of the following asset classes. Which one would you choose? We gave you 4 choices: volatility, so your VIXs, your VXXs, we don't care which one of those, or equities. Again, we don't care the S, the Qs, we don't care. Fixed income, 10-year, 30-year, wherever you want to go, or crypto, so your Bitcoins, your ETHs, your Solana. Hint, hint, all sorts of madness out there. Mr. Uncle Mike, I know you're all over the cryptos. I think I know what your answer is going to be. But if you have a different answer, by all means, let us know. And then B, more importantly, what do you think our audience is choosing in our annual sentiment poll?
Well, as tempting as Shiba Inu actually is for me to buy.
You love Shiba.
Loving me some Shiba Inu. I think I would go with equities. I think that 10% out of the money call, it's not necessarily a bad thing by any means if you think it's going to go up 10%. So I think that, and I think our audience agrees with me.
What a surprise. Uncle Mike picking equity. I never would have seen that coming in a million years. Mr. Meatball, same question for you. Which of these would you be choosing? And also, where do you think our audience is going?
Ooh. Oh, let's go equities.
Wow.
And the audience is picking equities.
Not talking your book. I thought you'd be going straight vol. But
I know. I'm not going to talk my book.
Interesting. And the audience is going equities as well. So, Mr. Flowmaster, we got 2 votes for equities. Do you agree, or are you going to go somewhere else? Are you a crazy fixed income man?
I'm not, although I talked to some guys all day long, and when we had that big sell-off in bonds, they actually were snapping up some things. And it's interesting, right? I've never really traded treasuries, but they're kind of annoying. Usually you have to either call a broker, they're big blocks of money. But then I was looking at like, well, wait, why didn't you guys just buy some TLT or some TLT calls? Because there's an ETF that is treasuries. And they said, oh yeah, that would have been a lot easier. And if you look at the chart on TLT, it's pretty impressive little dip followed by a recovery. I'm going to say equities. I've been dabbling a little bit more in crypto. That must mean it's almost over. I think equities. I mean, yes, last year was an exceptional year, and I don't think we're going to see that again. And what's interesting nowadays is, and this is not the first time, but you get people saying, well, okay, we had the Magnificent Seven. This concentration in these top names, in terms of market cap is not sustainable. And which is going to happen? Is everything going to go down, or are those names going to go down and the other names going to catch up? And kind of depending on which week it is, you get different readings. But I think we are going to see basically the rest of the equity market kind of come up. Maybe, names like Apple and Tesla might not have much of a great year. So anyway, but I'm going to say equities, something like SPX, or even one of the equal weighted RSP. I think is one that I put a little bit of money into.
There you go. Well, let's see where our audience is hanging out. By the way, 3 for 3 for equities. That's interesting. Vol taking it though right now. 41.7% of our audience choosing the VIX. Again, not hard to think. 10%. You can go at talking a 12 handle, 1.2 points. VIX can do that in a couple of hours. So not hard to see why they're going that way, followed by exactly a third of you, 33.3, coming in for equities. Crypto getting roughly double the response it used to get on. It used to be around 7.5% of you would vote for crypto. Now with all this crypto madness, getting nearly 17%. 16.7% for number 3. I wonder why that might be. And then bringing up the rear, no love for Uncle Mike's 10-year, only 8.3% out there. Speaking of which, our chat, Mr. Uncle Mike, loving the fact that you love some Shiba. They're having a ball with that. So Uncle Mike and Shiba, two great tastes that taste great together. As we keep on rolling, before I do that really quickly, speaking of polls, I know a whole boatload of you voted in our end-of-year vol poll out there. A lot of you, thousands of you, have also sent in your end-of-year VIX guesses. We're going to keep those guesses open through pretty much the end of this week in vol views, so probably into the weekend. So if you haven't made your specific VIX guess yet, get it in then. We're nice. We'll give you a full week and won't give you a leg up on people guessing for the end of the year. We had no winner last year. Nobody got within even like half a point. It was kind of ridiculous. So we thought we'll give you folks, and we got a lot of people coming in this year. So someone I has to win, I think. But if you haven't done it yet, add options on Twitter, listeners, the place to go to get your guests in as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode on Monday. Mr. Meatball, let's start with you, sir. What are you keeping an eye on until the Monday episode?
Well, we've got non-farm payrolls tomorrow on Friday. Those are going to be, I think, a big deal. I'm watching the S&P and this 21-day moving average that it bounced off of. Is today going to end up red or not? And I'm keeping an eye on Apple. Is it a golden apple or is it a bad apple? It's coming up right off its all-time high, but now it seems to have pulled back, had an ugly week. It's getting a bunch of downgrades. Is this going to be the year that Apple decides to come back to kind of instead of a growth stock multiple into a value stock multiple? That's kind of I don't know if I'm watching that through Monday, but that's one of the big questions I have on the year.
Fascinating stuff there. Mr. Uncle Mike, same question for you. What are you keeping an eye on until the Monday episode?
Well, I'm looking at this. I wanted to see if we can hold 4,700 on the S&P. So watching that. Also continuing to watch bonds. I think that's going to be a key thing right now, just because of the fact that there's no indication or there shouldn't be any fear of rate increases, but shouldn't in actuality don't always mesh together. So watching the bonds to see how the world reacts to this.
And last but not least, Mr. FlowMaster, sir, what are you keeping an eye on until your next appearance next Thursday?
Well, I will be watching the crypto ecosystem as this cash ETF approval does or doesn't move forward. And then we have some interesting things going on in flex options, which I've mentioned before, and we can get into it next time, but we actually are now starting to publish theoreticals and Greeks on flex trades as they print, which is kind of cool because it's an opaque piece of the market. Most people don't even notice it trading, and to be able to kind of have a valuation and some Greeks on it will make it a little bit easier to see what's happening.
And if folks want to access all that CBOE goodness for themselves, Mr. FlowMaster, where should they go? What should they do?
CBOE.com/RMA. You can request a trial, and the flex trades with analytics on them, you'll be able to get in both Trade Alert and Live Vol Pro.
There you go. Check them out, CBOE.com/RMA. And Mr. Meatball, same question for you. If folks want to check out all of your good goodies, where should they go? What should they do?
Come to OptionPit.com. We're putting out great stuff every day. I'm actually in the middle of my 0 DTE January challenge, Mark. So I'm trading 0
like
DTE.
Not drinking all January, something like that?
No, it's like dry January, only instead of being dry, we trade 0 DTE options. Yesterday's trade, I bought the, you'll like this, Mark, I bought the 47.15, 47.05, 46.95 put fly for 85 cents. When we got that little pop after the FOMC. Went out worth $9.81. So not a bad little trade for me.
You're the
stuff that
poster
we're gonna be
child for
doing.
the journal saying the zero DTE is lottery tickets now. That's you. You're the guy.
It's not lottery tickets.
I know.
There's
giving you a
some,
hard.
pay attention to how they're pricing the straddles and strangles as the day progresses, because that tells you kind of really what the market's expectations are. It's very important. You and I can, next time I'm Andrew's on vol views with me for me tomorrow, but next week maybe we can sit down and do a little deep dive into some zero DTE and some strategy talk, or you could even have me on a pro Q&A sometime soon.
Good. Maybe we have a little zero DTE corner on the option block coming up. I know probably the FLOWMASTer.
That'd be
I
think people would like that. I think people would love that, don't you?
Not a bad idea. I don't know, listeners. You want that? Let me know in the chat and listen after the fact. Hit us up. You want a little more zero DTE action? Hit us up. Let us know. And the guy who can't get enough 0 day in his life, he is the uncleest of Mikes, Mr. Uncle Mike, sir. Where should folks go if they want to talk 0 day or also potentially have the Uncle Mike mobile show up on their front door?
For sure. Stop by my website, stcharleswealth.com. Set up an appointment with me. I'll give you a call. We'll talk how much I absolutely love crypto. We'll talk about pro wrestling, and we'll even talk about long-term financial planning.
There we go. All three of everyone's favorite things. Crypto, pro wrestling, and zero DTE. And, of course, some long-term financial planning. Our chat already not down with it. They're saying anyone trading 0 day needs to have a stiff drink. I don't know. Mr. Meatball, maybe you can turn them to the dark side.
Maybe.
We shall see. Unfortunately, that's all the time we have for this first episode of OB for the new year. Glad to have you folks joining us. Don't worry if you're hanging out in the live. We'll be back in a little bit with none other than our good buddy Dan the Man Gramza to break down all the madness going on over there at CME. What's going to light it up this week? Is it energy? Is it ags? Is it metals? Is it crypto? I guess you got to tune in to find out. So we'll be back in about 30 minutes. We'll pump some fun stuff into the chat. Then back again tomorrow, of course, with all things vol views at noon, followed by a little bit of options oddities. The first one again of the new year, so a lot of fun. And then we're back again next Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. CBOE's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.